Hello everyone, I'm Vidhan Bhosley, a developer advocate at Teradata. Today I'll show you how to detect financial fraud using Teradata ML package. Every year, hundreds of millions of dollars are lost due to financial fraud. Frauds like stolen credit card, misleading accounting, phishing emails, etc. Therefore, it is important for banking and financial institutions to detect the fraud at the right time. And that is what we are going to see today. To access this demo, you need a ClearScape Analytics Experience account. Go to teradata.com/experience and sign up for a free account. After signing in, create a new environment, provide a contextual name to it, a password that you can remember, or better, jot it down somewhere because it will be required later on. Once your environment is up and running, click on Run Demos. It will open a new tab with a hosted Jupyter notebook environment. Where you can find 90 plus AI/ML use cases from different industries. The one we are interested in is from financial. And the notebook is titled Financial Fraud Detection in DB. Click on drop down and select the Python version, and it will open our notebook. In this demo notebook, we'll see how to build, validate, and score a model at scale in Teradata Vantage, all with the help of simple financial transaction dataset. This demo will help you in identifying financial frauds in multiple accounts, reducing losses due to financial fraud, and can even help with reducing customer churn and increasing customer satisfaction. We start by downloading and installing required libraries. Then we'll need to connect to our Vantage environment. You need to provide your password here. Then we'll download the data required to build the model. You can check status of your table and databases also here. The next step is data exploration. The data is acquired from this particular website, and it has around 63,000 rows and 12 columns. And these 12 columns are step, which is basically hours. One step means 1 hour. Then you have type, which is basically type of transaction. It could be cash in, cash out, payment, transfer, even debit. Then you have amount, the total amount in the account of the customer. Then name origin, the origin from where the transaction has begun. Old balance of the origin, that is the balance of the person who has started the transaction. New balance of the person or the customer, or name of the customer where the transaction is ending. Old balance of the customer who is receiving the money, and new balance of the customer who is receiving the money. And then we have a column is fraud, which basically means you have two options here, 0 or 1. 1 means yes, there was a fraud. 0 means no, there wasn't any fraud. And then we have is flagged fraud, and then a unique ID, which is transaction ID. For example, in first row, it says that it is on the 13th hour and the type is cash out and the amount in the account is this much. And this is the name of the customer, which is being anonymized. And the old balance is this much, new balance is 0. That means that all the money has been withdrawn and it has gone into this person's account, and whose old balance was this much and the new balance is this much. And is it a fraud? No, it's not a fraud transaction. In this section, basically we are exploring the data set before building the model. You can find out the number of fraudulent transactions in our data set, and you can see that there are around 92 transactions which are fraudulent, which is 0.14% of total transactions. You can group all the transactions on the basis of transaction type, and you can plot it. You'll find out that most of the transactions are either payment or cash out. You can also group the fraudulent transactions on the basis of transaction type. And you can see that around 47 transactions are of transaction type transfer and 45 transactions are of transaction type cash out. You can check how many fraudulent transactions resulted in zero balance in customer's account. And the answer is 90 out of 92. That is 97.83%. You can also find out basic statistical detail using describe function. You can even find out if there are any null values in the columns in our data set. You can check for outliers also using outlier filter fit function. Here we are finding out outliers in all the columns that contain data related to transaction or money. You can find out the total number of outliers also. And there are 11,869 outliers. You can calculate the number of outliers using Teradata's td_minus function also. Now, we understand everything about the data. Next is to prepare our data to build a machine learning model. We start with dropping the redundant columns, the columns that are not going to impact the outcome. There are 3 columns that we are dropping here. Then we one-hot encode the type column. The values of type columns are cash in, cash out, debit, payment, and transfer. These values cannot be numerically processed. So we need to convert it into something that can be numerically processed. And that is where your one-hot encoding comes into the picture. Here we are passing values and then the column name, which is type. And then we are retaining the following columns. And then we are performing the one-hot encoding. You can see here, the output tables look like this. Now we have cash in type, cash out type, debit type, payment type, and transfer type. And the values are converted into zeros and ones, which can be numerically processed easily. Next, we would want to avoid any feature biases. We don't want one feature be influencing the result more than the other feature on the basis of its value. Basically, we want to give equal importance to all the features. For that, we are using scale fit and scale transform function of Teradata ML package. Scale fit function takes data, scale method, which is standard deviation, and target columns as input. And the output of scale fit function is the input of scale transform function. Apart from that, we also provide data as the input and accumulate, which is basically the input columns we want to see in the output also. And this gives us the scaled output. Now, we have the scaled data. But before moving to building our machine learning model, we need to prepare training data set and testing data set. Here we are dividing our data set, our scale data set, into 2 parts. 80% of the data will be our training data and 20% of data will be our testing data. And this is how our training data looks like. Let's start with our model building. Here we are building a model that will predict if a transaction is fraudulent or not. And for that, we are using Teradata's NDB function called GLM for building the generalized linear model. The GLM function takes following inputs: your training data set, all the input column except your transaction ID and fraud column. Your response column is fraud. And lastly, we are specifying distribution exponential family as binomial. The output of this function is our trained GLM model. And this trained GLM model is going to act as an input for our another Teradata NDB function called td_glm predict, which we are going to use for predictions. Apart from trained GLM model, we need to pass other inputs to our td_glm predict functions. These inputs are your testing data set, your unique column, which is transaction ID, and a column that you would want to copy from your input table into your output table, and that column is fraud. And what kind of output do you want to see as response? And we are looking for zeros and ones as output. If you look at the output, you can see that the prediction for top 5 transactions are all zero. That means that there is no fraud. And if you compare it with our last column, which says fraud, that means that our model is performing pretty well. But do you know there is a better way to evaluate the performance of a model? And for this, we are going to use another Teradata NDB function called classification evaluator. The output of classification evaluation function is a set of values that tells us how well our model is performing. We get accuracy, micro, macro, weighted average matrices of precision, recall, and F1 score value. On top of that, we can also draw a curve to understand the performance of model. This curve is called ROC curve. ROC stands for Receiver Operating Characteristic Curve. Higher its value, better the model performance. If you look at the AUC value, which is area under curve value, it is 0.84. That means that our model is performing well. If you look at the plot, you can see how ROC curves look like. And any AOC value above 0.75 is considered decent. And our AOC value is 0.8454. I hope you liked the video. If you have any queries, you can comment them below, or you can even reach out to us at support.teradata.com/community, and we'll be more than happy to help. Until next time.